We're now going to have a couple of really exciting conversations with people in the Mubadala universe. And so I'd now like to welcome to the stage the Deputy Chief Strategy and Risk Officer of Mubadala's investment company, Marc Antaki. Come on up, Marc. Now, Marc, it's no surprise that here in Davos, there's a lot of enthusiasm for AI. That enthusiasm is basically matched only by the level of capital that is being thrown at the challenge and the opportunity. But from a portfolio strategy perspective, what do you think investors are still getting wrong about the AI cycle?
Ryan, great to be back, first of all, at Axios, and good afternoon to you all. So on AI, let's maybe look at the landscape. We're still at a very early stage of a very long-term transformation. What exactly do we have today? We have a technology with its imperfections, but still it's evolving, it's maturing, it's becoming much, much better year over year. We have a build-out, energy, power, infrastructure, data centers, and that is expected to take anywhere between 5 to 8 trillion until 2030. The exciting thing and the real value is going to come through the adoption of AI that has started. But if you look at all the studies and you hear all the CEOs talking, nobody is certain on the real opportunity. It can be 5, 10, 30, 40 trillion dollars. Now, what does that mean? That means we don't need to look at it as a tech cycle. We're looking at it as a long-term industrial, economic, and social transformation. And if you look a bit at the history, what we learned from all of the innovations that came, electricity, locomotive, internet, it's multi-decade. There are blows along the way, but the real value comes in multiple phases. So as we at Mubadala, we have very strong conviction on that theme. As we reflect on that AI theme, the main question that comes to our mind is not what AI can do. Certainly a very interesting question. But the big question that we ask is when, where, and how capital compounds and value, we heard it from Ray Dalio before, value actually starts to materialize. And this is what drives our logic as we think about allocating capital to the space on a 1-year, 3-year, 5-year, and 10-year horizon across the different phases and the multi-layers of that transformation. That's number one. Number two, to be able to succeed in that transformation, we need to build the skill set, the capability, learn, adapt, and the partnerships. And the selection of the partnerships is extremely important. And number three, because we're convinced about AI and adoption is crucial, we have decided to be early adopters of AI, both at the company itself, and we're doing very exciting things and we're starting to see some very exciting results, but also with our portfolio companies, because at the end of the day, this is where the value is going to come from. This is where the competitive advantage of Mubadala and the different companies we're investing in is either going to be strengthened, realized, or become better.
Now, if we think about both the AI tech and the skill sets and the cultural shifts that come with it, that does not happen in a vacuum. There are obviously big shifts going on in the global economy, and I think more and more they get framed as a deglobalization trend. Is that what you actually see happening? Is there really deglobalization?
Ray explained it much better than I could ever wish to explain it. But let's take a step back. That deglobalization, I think, started in 2008 with all of the different shocks that we had, changes in the financial systems, rewiring of supply chains, rewiring of healthcare, rewiring of energy security, and. And that re-architecture of the order, the system, is certainly accelerating with time. It's becoming more complex. It's becoming more capital intensive. And I would not qualify it as a deglobalization because it gives a sense that actually the world is shrinking. It's not. It's a globalization with new constraints, where any business, any investor need to be, one, aware and adapt to the new realities. So capital, and we heard it from Ray as well, capital likes a few things: certainty, clarity, prediction, but also likes the alignment between policy, financial systems, industries, labor, societies. And that combination is extremely important as we think where we allocate capital, where we drive our businesses. Let me maybe take one example that I think exemplifies a bit how these different components come together. And for those of you that don't know the UAE, it's our home. We are UAE based. A quarter of our portfolio is based in the UAE, and we've been very active for over 20 years in building, developing, and supporting the local economy. But if you think about what the UAE has today, a very vibrant society, a very vibrant and growing business ecosystem, a very stable ecosystem. So if you look a bit at the stats, the UAE today, and for the past probably 2 or 3 years, has been number one globally on safety and security, on digital infrastructure, internet speed, has been probably in the top 5, depending on the different studies that you see, on AI capability, and it's driving adoption tremendously well. It's number 3 in inward influx of talent, high net worth. And I'm just saying all this because it doesn't come all of a sudden. It doesn't come by luck. We need a bit of luck always, but it comes by design and hard work. And the elements, if I reflect a bit on that, for me, 2 or 3 things come to mind. Leadership and inspiration are extremely important, and we see them very visibly. Integrity and accountability, and partnership, plus the hard work. And these are the values that we actually live on a day-to-day basis at Mubadala.
Now, I love that point about basically you get the AI you design for. And we've seen a lot of people rushing to the efficiencies that can come out of AI building and adoption. But there's like a shift from efficiency mindset to resilience is something I'm picking up. What does that mean for investors who initially built their playbooks around cost optimization and scale rather than this deeper notion of resilience?
Let's maybe start by defining resilience, because it means different things for different people. For some people, it's having enough cash on the side and deep pockets so that you can cover for any loss. For us, resiliency means the ability to absorb shocks. You know you're going to drop in performance. But what's more important is to be able to recover and grow stronger. And that's the main philosophy for us around resilience. And why is that important? You've also hearing it more and more at Davos. All of the investors are very careful and doubling down on resilience. That world we are in and that re-architecture of the world is resulting in more frequent blows, more frequent shocks, very often unexpected, sometimes stronger. Actually, we ran a survey a few months ago where we surveyed 260 institutional investors from everywhere, north, south, east, west, on what does resilience mean, how do you think about it, what are you comfortable and confident. And if I give you 2 or 3 observations, first of all, resilience for all of them is one of their top 3 priorities. The second interesting observation is only 50% of them is highly confident that the resilience strategy is right. And everybody has a bit of doubt, what am I missing? And if you think about the space where they're positioning their portfolios, private market is one of the top ones across infrastructure, credit, and private equity. So maybe for us, and to give you a sense of how we implement our resilience and how we design it, the resilience at Mubadala comes from 3 things. Number 1, a resilient strategy, meaning we are able to think ahead and be able to have a strategy that outperforms under any different type of environment. Number 2, a resilient portfolio companies that are able to absorb shocks, that are not going to drain the liquidity and are going to come out stronger. And number three, which is the glue of all of that, is a resilient institutions, a talent pool that is aligned, that is dynamic, and that can adapt. And these three things together give us a bit our resilience at Mubadala and played out very well over the past crisis.
There we go. Deep layered resilience. That's something we could all support. Marc, thank you so much. Unfortunately, we're out of time, but thank you very much for joining us.
Ryan, it was a pleasure. Thank you very much.